Top three things in my notebook this morning. Number one, the euro. Number two, the yen. And number three, the jobs report, including the 10-year bond yield. So first on the euro, just absolute evisceration at this point. You've just collapsed the currency. I mean, we're back, I think we're testing here 109 going 108. It's just literally straight down. And in the face of that, the dollar's gone straight up. So again, this only reinforces our deflation view. And again, our deflation view is largely instructed by our dollar view, which is instructed by the European and Japanese policy views. So again, what this guy's doing with this like smirk on his face is fascinating to watch. We don't think that it will create any kind of economic value add, but it will create these massive melt-ups in, I guess, in their stock markets. I mean, that's fantastic. Portugal, up 19% for the year to date, absolutely trouncing the S&P 500. Second point would be the yen. So again, it's really the same point. But again, look at the Nikkei go, up almost 9% now for the year to date after a 1.2% move, as the yen has burned now through the 120 line. Again, as a reminder on both the euro and the yen, our intermediate term targets have been 105 and 135 respectively for the euro and the yen versus the dollar, of course. And again, those targets look firmly intact at this point. Finally, I'd say that the 10-year bond yield, again, I've tweeted this, I've said this, I've been in meetings all day yesterday. I said, look, on a good number, the 10-year hits the top end of the risk range, which is 218. On a bad number, it's going to be Geronimo, again, 20 to 25 basis points of downside in a New York minute. Obviously, you don't get that because the jobs report was good. That is really not congruent with every other piece of jobs data and or economic data that I've looked at. But again, that is good. I mean, I don't know whoever put that number together, but it looks good. So you say what you say what you want to think, but the reality is that a good jobs number is bullish for bond yields in the very immediate term. We'll see if they tap out here at 218, 219 or not. As a reminder, the intermediate term trend resistance line for the 10-year bond yield is 2.39%. And those are your top three things.